What's up, guys? Bullish Bears Dan here. It is, what the heck day is it? It is Thursday. Man, this week is flying by. Gonna do a midday recap for y'all. Sorry I missed the last couple. Just had some irons in the fire that needed attending, but we are back at it. And I'm gonna recap the AMC trade this morning. So AMC had a really nice setup below 10 bucks. There was pretty clear indication that this thing was looking to rip. So if you take a look at the pre-market, very typical AMC, gap going into the open, started to megaphone down, and we saw some really nice buying off the lows at 967, 968. Big 1 minute engulfing candle, just engulfing the last 3-4 candles. You got a little bit of a close above that 9 EMA. Now, AMC, I got filled at 986, so let's mark out 986. Ooh, did I just do that on the first try? I did. So, why did I take this fill? I loved this 1 minute candle, and in the last few seconds of that 1 minute candle, the size of the candle was really nice, of course, after the first initial thrust. And what we saw is that this megaphone down was very likely to break. We were watching traders lining up below this 988 level. This 988 level is what we were watching closely. That was straight from the opening range. So if let me just kind of zoom in here. I love trend spider charts. They're just so easy to use. You got the multiple time frame analysis. It just works. So this was that opening candle, so I was watching that range for a push through to actually break above. So once I got that fill, my anticipation was that this candle was going to break, and we got it. So there was a really nice follow-through candle. I call this the grass is greener on this side of the fence, and then selling to the folks on this side of the fence. So once it breaks over that level, you look to take some profit, either whether it's a quarter, half. You want to take some profits and sell into that strength. It did backtest that breakout zone, rode the 9 EMA. There was a secondary trade, and I got my exit at, let's see, I got out at 10.09. It continued to run a little bit from that level. So 10.09 was actually my exit. Now, interesting enough, there is a Fibonacci level, and I had this question come up in the trade room today. They were asking me, how are you doing Fibonacci's? What are you looking at? How do you get that 10.09 level? I like to look at previous highs and previous lows to draw my Fibonacci retracements, and I do them on minor and major time frames. Real quick too, one of the other things, I almost forgot about this. This was kind of key or essential to the move. This is a 5-minute chart versus the daily moving averages. There was the 21-day moving average, which was also a bull bear zone for me. And once the short-term candlesticks started pushing above that 21-day, that was also a really good signal. I had marked that out originally with that that horizontal line. So that was a really good sign. And that's unique to TrendSpider, being able to take short-term candlesticks and compare them to daily moving averages, which is so common with penny stocks. So this Fibonacci level, I was looking at just the 4-hour chart. I was going through, and I'll cycle through and find these major highs and lows to draw my Fibonacci's. I do this on the daily time frame. Hang on, let's go back through, find the 15-minute. Yeah, 15-minute. Where did I get this Fibonacci from? I think I had drawn that in the recent past. Let's see, the high level. Yeah, so that was the 236 Fibonacci level. And just see how it respected it, right? We weren't able to really hold above. I was also watching these angular trend lines. I went back on the hourly chart, and I was taking a look at previous highs where we had really sold off on AMC. Again, there was another really nice run, sell-off. We had a nice run, and of course, what happened? We tagged that upper trend line and sold off. So that was good enough for me to want to get out of this trade and kind of stay away for a while. All right, next let's talk about INO. This is another one that was up in the pre-market. This thing is prone to just pump and dump, and that's what happened. I'm looking at the hourly chart versus weekly time frames. You notice that we're running into some, or we were running into some weekly resistance levels. And what we get is after we tag these levels, it's very common for a sell off. Happens all the time with small caps and penny stocks. So in the mornings, I'm typically going through and I'm looking at where the daily and weekly, maybe monthly moving averages are and figuring out where those sellers are going to be hanging out, where the bag holders. And, you got the 50-day moving average up here, you got the 100-day. So there was a cluster of daily and weekly moving averages, which is a sure as heck sell sign for me. And we ended up trading this one. Let's see, what do we do? I got in at, wow, 935.25, and I actually was looking to average into this position. So, it was really trading in a range, and we were looking at this 995 level for a breakout. If you look really closely, we broke this downtrend and started to move. There was a nice, really kind of shallow inverse head and shoulder that had formed up. This is the left shoulder. There's the head down here. And then we were watching for traders lining up right below this 995 level. Boom, they smashed through. There was one more flag continuation that eventually failed, and this failed hard, which was the signal to take all the rest of the profit. But again, sell into the strength. If you are smart enough to get a really good average into a position through this zone, and you get a big 1-minute candlestick like that, you want to sell into those consecutive candlesticks. Sell on the first one, and then you've got some other opportunity to sell inside the flag. You can hold maybe the last third or 20% of your position for the potential flag breakout, but then if it fails like that, you don't want to have to dump your whole position on a dump move like that. I mean, look what happened. Imagine if you just didn't sell anything and then boom, 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 it starts dropping. You're now giving back so much profit, maybe having a harder time getting out, and then the stock just trails off. The shorts are just having their way with it. So again, first thing to watch out for, guys, are those daily, weekly, monthly moving averages. If you want to try out TrendSpider, I'm going to have a link in the description of the video. You can do a free trial. It's highly recommended that you do the trial and see the TrendSpider difference for yourself. And this is something that we actually use. It's not just something that we're just throwing it out there. This is an extremely useful tool for day and swing traders, and I'm just showing you one way to use it. There's so many different ways to use it. So that's really it, guys. Other than that, there wasn't too much that I particularly liked on the gap scan. I was watching a lot of these gap scans on gap scan stocks on Trade Ideas, but just didn't offer me anything that I was really into. So, now I'm kind of going to take a look at what large caps are doing. SPY's having a great day today. Russell's lagging a little bit, so you got IWM kind of a little bit of laggy, but trying to find its foothold and follow the other ETFs today. But all in all, man, the bull market marches on. Guys, hope you have a wonderful rest of your day. Please like, subscribe, share, do all that fun stuff. Help us grow, and I will be back on later. I'm going to be doing a video on a new product that's really, really cool that I'm using for options trading. So stay tuned for that. We'll see you guys later.